Hey, welcome back. You're watching Your Money, Your Wealth. My name's Joe Anderson, certified financial planner with Big Al as well. We're talking how to invest your overall capital. A lot of different things that you can do with your money. You want to make sure that you do it right. We're giving away a free book, Invest Like Warren Buffett as well. You can go to the website. But I think let's just check your knowledge. We do true and false questions at the break. Let's just see what you guys did here.
Okay, here we go. If I sell a stock at a big loss, I generate a capital loss on my tax return, but I can't deduct that loss against the sale of my rental property. And that is absolutely false. A lot of people don't realize if you sell a stock at a loss outside of your retirement account, that's the key, that loss shows up on your tax return and you can utilize that against any other capital gain, dollar for dollar. So a stock loss does actually net against a real estate gain. And for some of you that have rental properties and want to sell them but are afraid to pay the tax, you may have some loser stock positions in your portfolio, not because you tried to, but just because that's the way the market goes sometimes. You can sell that position, utilize that loss against your real estate. So that is available. And that's a big deal in saving taxes.
Right. I mean, again, you want to make sure that you're taking a look at taxes in regards to your overall investment strategy. So we looked at a couple of different things. First of all, you want to make sure that you invest globally. A lot of you are particularly, what we see is that you're just invest in the U.S. domestic markets. Large company growth stocks, buy what you know. That's what Peter Lynch always said. The rules have changed. You want to make sure that you have a globally diversified portfolio. Then you want to look at, well, how much money that you have in stocks versus bonds. And then in that portfolio, then you want to make sure that you have different categories of stocks. Because I have growth companies, large growth. Then I have some smaller companies here. Then I have value. I want to increase my overall return by tilting that portfolio a little bit more towards value companies and a little bit more towards smaller companies. Then we looked at the tax situation. All right, well, where are you holding your assets? If everything is sitting in your tax-deferred account, such as your 401k plan, everything comes out of there at the highest tax rates. So you want to look, hey, I want to make sure that I have some tax-free dollars or taxable dollars. Al just said this, all right, if I have a stock loss and real estate gain, can I offset those two and pay zero tax? The answer is absolutely. That's why you want to make sure that you're looking at your taxes in regards to your overall strategy. Here's another big thing. So when you look at investing, when should you buy? Should you buy high? No, you should buy what? When the markets are low, okay? But people do the exact opposite because of emotions. When the markets are very high, all right, the markets are going up, I feel really good, this is when I want to buy. And then when the markets do this, well, I don't feel very good, this is when I want to sell. That is the opposite of what you want to do. You want to be sure that you're buying here and then selling here. How you do that is just real simple. It's called rebalancing your portfolio. I'm just going to give a real simple example. I have 50% stocks and then 50% bonds. So now the market has increased. Instead of having 50%, now my portfolio looks like this. I have 60% in stocks and 40% in bonds. Well, that means I'm out of balance. What I want to do is make sure then, here, I have too much weight in stocks. So I want to sell my stocks, buy more bonds, so I get back to the 50-50. If you rebalance your portfolio, you're always buying and selling at the right time. It's a real big deal, and if you do this correctly, you're going to add tens of, not hundreds of thousands of dollars over your lifetime, and then when markets crash, your recovery time is going to be that much quicker because you're buying more shares of stock when the markets are low. They will correct. We just don't know when. Is it going to be tomorrow, next year, 5 years from now? Who knows? But make sure that you have the appropriate strategy. Al, a couple more things that we want to get into before we get out of here today.
Well, we do. And the next category I would say is not all investments are created equal. And certainly you could buy an individual stock. That would be one way to buy a position. But we don't think that's a good idea because you need diversification. You should buy a fund, a mutual fund, index fund, ETF, that has many stocks for that diversification. But those different kinds of investments are not created equal. Some have high costs, some have low costs. And when you look at what some of those costs are, some have initial costs to get in. That's called a load fee. Many and all have internal costs, and then some have back-end charges. And if you just take a look at what some of these different kinds of investments, the low-cost investments tend to be index-type funds and ETFs, exchange-traded funds. Medium cost would be retail mutual funds, kind of in the middle. And the most expensive investments tend to be annuities and non-traded REITs. And if you just look at the cost component alone, you kind of want to stay away from those higher cost investments and stick to the lower cost investments. That's not the only thing you got to consider. It's the other components that we talked about. But cost is very important because you don't want to give up your profit to someone else.
Right. In today's environment, if you take a look, if I'm paying a load of 5% and I'm paying 2 or 3% internally, that's money going to Wall Street instead of you. So if you look at, all right, if I have the proper diversified portfolio, I'm globally diversified, I'm tilting the portfolio more towards asset classes that are going to give me a higher expected return. If I make sure that I'm looking at the tax components of all of my investments, I rebalance the account, and then finally, I pick the lowest cost possible. That is going to add a lot more wealth to the bottom line. If you want, let's put all this together. A couple of things that I'm going to do. If you ever want to go to a retirement planning course, I teach a retirement planning course all over Southern California. You can go to yourmoneyyourwealth.com if you want to take advantage of that. It's 6 hours. Everything that we've just crammed in a half an hour, I try to educate you and teach you on doing the things right with your money in a 6-hour course. We do 3 hours one night, and then we conclude 3 hours the following night. Go to yourmoneyyourwealth.com and check it out. You can look at, all right, well, when's the available classes? Is it anything near you? I would guess that I'm probably teaching somewhere near you. It's usually 3 nights a week. I'm out and about trying to educate you. If you want to come into our office and say, you know what, I need some help, I would like to sit down for a second opinion, use it as a sounding board, just call our office, 888-994-6257, 888-994-6257. Go to yourmoneyyourwealth.com. Hopefully you enjoyed the show.
It was fun. I can't wait for next week.
So join us next week. We got a lot more to go. Go to our website, Your Money, Your Wealth. For Big Al Clopine, I'm Joe Anderson. Have a wonderful weekend.